Hey everybody, it's Erik Torenberg, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts.
Hey everybody, welcome to another episode of Village Global's Venture Stories. I'm here today joined by my teammate Lucas, and we're today joined by two very special guests, Travis Hedge, co-founder at Vouch, and Nick Shalek, partner at Ribbit. Travis, Nick, welcome to the podcast.
Thanks for having us. Excited to be here.
Thanks, Erik.
Let's start with the intro to Vouch for people who are unfamiliar. Travis, why don't you describe what Vouch is and why you set out to build it?
And so Vouch is an insurance company for the innovation economy. You know, my backstory goes back. I was kind of born into the insurance world, grew up wearing a sweater vest for career days, and I wanted to be a broker like my dad, but kind of took a winding path to get there. And it was ultimately when I was at Silicon Valley Bank on the SVB Capital team, actually doing a lot with Nick and the Ribbit team. And we'll kind of get into that backstory that led to us starting Vouch. I had seen where my parents' agency here in Columbus, Ohio got hacked a few years ago. And so it got me thinking a lot about what are not only, he should have had a cyber policy in place, but also what are those first line of defense things that entrepreneurs everywhere should be doing to protect their businesses from the same risks that Fortune 500 companies face, but with a fraction of the resources. We also got to see how, all the companies that we were working with were managing their commercial insurance and how it was a pretty painful, broken process, really not intended for, venture-backed high growth companies. And so it's been a few years looking for a company like Vouch and kind of scanning the market. We knew there was an opportunity to build a carrier in the commercial insurance category based on what we'd seen in personal lines. And so was really fortunate to team up with Nick in kind of 2017, 2018 and say, let's build it ourselves. And so Vouch is, again, an insurance company for not just technology companies, but now life science companies as well. And our goal is to be, the de facto exclusive commercial insurance partner for high growth tech companies from company formation all the way through IPO. And so we've been working on that now for about 3 years and been, really fortunate to have Nick and the Ribbit team behind us.
And Nick, you guys have been involved since the very beginning, right? So why don't you tell us a little bit about how you met Travis and how you guys worked together to build the company from scratch?
The founding story, I guess, is as Travis laid it out. This is a problem we'd been thinking about for years since the start of Ribbit. I think it really just started from a customer experience perspective. We could see that tech founders could get their business up and running with a modern software experience in pretty much any category. If you wanted payments, you could get it in 5 minutes. If you wanted payroll, now there were players like Gusto or Rippling. If you needed accounting, that was all available online. But insurance was basically the same experience as 100 years ago. You were asking a friend to introduce you to a broker you didn't want to talk to. And so we knew tech founders and that wasn't what they wanted. I think from a business model perspective, you didn't have to look beyond SVB or Stripe or Brex or several other companies that were serving the innovation economy to see that this can be a really powerful way to grow a business. If you can find and serve customers that are building the future, you really end up with the wind at your back. That was sort of the lesson from watching those companies. But thinking about an idea obviously is not the same as executing on it. In the end, we did this because Travis and Sam, who are two people we've known for a really long time, they showed up and they wanted to pursue the idea. And we could not have described better founders for building this, in part because they just had the right DNA. This is a very complex business to build. It's about growth, but it's also about risk. And developing insurance products for tech companies requires, getting your hands really dirty, the insurance components of the company. We just found the right people. And then we were lucky from early on to have SVB, YC, and some other partners that have helped Vouch kind of develop into the company that it is now.
I want to make sure Nick gets a little more credit there because I think he and the Ribbit team had basically thought through every dimension of this business before we got it off the ground. And I was, so if you go back when I first came to Silicon Valley, I was coming from the nationwide insurance team. So thought I knew a thing or two about insurance. And I remember we did this, I was 6 months in, I was excited about all the shiny objects of drones and AR, VR. And I was like, maybe I should get back into this insurance thing. So called the smartest guy that I knew at Nationwide, this guy, Alex Tim. And turns out he was had just left a week prior to go start a company that became Root Insurance. And I remember around that time, I got to meet Nick for the first time at this VC wine tasting thing or something. And he asked me hey, you're coming from insurance. What should I be looking for? And I remember when we were at Nationwide, the big thing that we were looking for was direct commercial opportunities. So that was the first thing out of my mouth. And then fast forward a couple more years, and Nick and I got the chance to work together on Root. I remember after every board meeting, we talk about, hey, like, where's the Root for commercial? Are you still looking at this? I'm still looking at this. And, I remember getting a call from Nick a couple years later, like, hey, we're getting really serious about this. What do you think? And that's when things really kicked off. But I was very fortunate that Nick had basically already thought through every angle on this and went straight into, hey, how do we build something together versus, I think, like, one party pitching the other.
Right. So we're going to talk in a bit about all things Insurtech. But before we get to that, I thought it would be fun to just cover a little bit of the history and the progress with both Vouch and Ribbit. So Vouch, you just announced a big Series C. Congratulations. Travis, do you want to give us a little bit more insight on all the progress and kind of where you're at now?
Yeah. So when we launched the company, as Nick mentioned, we were very fortunate to do this with Ribbit and Silicon Valley Bank as kind of our two anchor partners. And then we went through YC and launched the business really within on demo day, actually, for the summer 19 batch. And so, as an insurance company, we had to go state by state, kind of getting our initial products approved and really activating each local market. And so we spent the first year of the business going from 2 states to 27 states, really proving out our go-to-market strategy, whether people would buy, what we were selling, and really making sure we solidified product market fit. And so we then spent the next year really building the next generation of our products, right? So using all those learnings to launch our own insurance company, because that was kind of a major component of the value chain that we can talk a little more about. Launching 5 new policies on top of that, launching our own policy admin system, basically doing a lot of things that would help us accelerate our ability to ship new things, accelerate the velocity of the business, and critically move into the second phase of the business, which is scaling with these companies through IPO. I think a lot of people asked us early on, Vouch is going to be like a broad-based SMB insurance company. No, our vision is to really be the insurance carrier from formation through IPO and beyond for innovative businesses, technology, life sciences, et cetera. And the products we launched this summer really give us the ability to do that. So right now we're very focused on scaling with our fastest growing clients where, we have companies that are paying as little as $200 per year. We have companies that are, have premiums north of several $100,000 per year. And so right now the focus is really on that scale moment for us and leveraging, the policies, the carrier, et cetera, everything we launched over the last few months to make that happen. And so the Series C was really fuel to kind of continue that growth journey, not just, capitalize the carrier, but continue to enable us to build the team and hire more engineers to keep, accelerating our progress.
Awesome. And before zooming out into Insurtech more broadly, Nick, can you discuss how you think about incubation at Ribbit and where it sits in the context of Ribbit and how to do incubation well versus not well? How do you guys think about that?
Erik, I wish we knew how to do it well. If we'd done it 20 times, maybe I could tell you, but we haven't. We've done it. We've tried to do it a couple of times. And I think that tells you a little bit about what I think, which is it's an incredibly hard thing to do. At the end of the day, venture firms can say that they start companies, but really founders start and build companies. They wake up every day, figure out the problems. It's one thing to have. I mean, Travis was giving me and Ribbit credit, but I think he's giving us way too much credit, and not saying that in some, with some false humility. I just think it's one thing to have an idea and do some research and put together a few pieces. It's another thing to go build. So for us, a good incubation requires first and foremost an amazing team. An amazing team can go, especially these days, start any company that they want and probably raise money from a lot of different people. So if you want an amazing team to work with you and you want to be there from the very beginning, you've got to give them a good reason. And part of that is trying to be world-class partners and give them, open up access to the data and the network that we have by virtue of investing in fintech around the world. But I think a bigger thing too is trying to help put some of the strategic pieces together. So with Vouch, for example, the first round of financing was very large, and we had already with Sam and Travis as part of it brought SVB into part of the conversation, which was part of trying to secure distribution for the first phase of the business. I think that when you put all those factors together and you say, well, for the kind of business that we're trying to build, an insurance business, what do you need? You need some distribution. You need a lot of capital. You need some partners who are really focused on the long term. Maybe that's worth it for an amazing team to join and work with you. So I'm not sure I fully answered your question, but I guess I would say Ribbit would love to do more incubations with great teams, but we won't do incubations just to have the line of business. I think we'll do it because there's a great idea and there's some great people we can work with.
I remember a comment that Mickey made as we were kicking things off that has always stuck out to me is, I'm going to butcher this, but he said something like, my job isn't to tell you and Sam what to paint. My job is to give you guys the paint, the tools, the canvas, and get to work and tell me when you need me. And that always kind of stuck with me.
And Travis, what would you say, having gone through this process, what are the main things, the main tools that Ribbit enable you that you think other entrepreneurs in this process that are thinking about doing an incubation with a VC firm should think about?
I mean, Nick mentioned capital is really important in this line of business. And frankly, I think if I had started having conversations with some folks about a business, basically Vouch back in 2016, right? But I was a young venture analyst. No one really took me all that seriously. And so I think a lot changed between those 2 or 3 years. But the ability to work with a partner like Ribbit when you're building a regulated, capital intensive business that brings the credibility, network, et cetera, to the table to enable us not just to access more capital, but also land a distribution partner like an SVB. It accelerated our ability to go land the next series of distribution partners, Brex, WeWork, et cetera. And so I think just credibility, big part of it, capital, a big part of it. But then also, I don't know, I've really valued having Mickey and Nick around the table in particular, because I think they kind of complement each other really well and push me in areas where I need pushed. Mickey's always pushing me to be more aggressive. Nick's pushing me to be a little bit more rigorous and analytical in some of the decisions we make. And I think that's a good balance. And so, anyways, for me, that's been the experience. It's been credibility, capital, and just having the right kind of people around the table to push us around, building a big company.
Right. And Nick and Travis, please chime in as well. But when you think about your Ribbit's thesis for Insurtech broadly and how it has evolved over the years, thinking about full stack, tech enable, or aggregator marketplaces, what are the spaces that you've been spending most of your time on? What are the things that you're most excited about? Yeah,
I think maybe the overrated thing in insurance is actually the terminology or trying to put things in boxes, and not just Insurtech, but in fintech more broadly. So saying full stack or full stack or tech enabled, it doesn't, in practice, I think it doesn't mean that much. They're sort of shortcuts for analysts or investors, but the real question, and I think, from a thesis perspective, we try to follow is who's going to win the customers? Because at the end of the day, we can probably say with reasonable certainty a few things. One is that tech has to be the differentiator for any startup that's going to win, because the incumbents have licenses, have capital, have, the regulators, largely in their pocket in many instances. The second thing is ultimately there should be a lot of capital in the world for companies that can show that they can find attractive risk reward and underwrite risk in an intelligent way. So, we try to find the founders who don't tell us, hey, I want to build a full stack company, or I want to build a brokerage, or but start with, here's what the customer problem is, and here's what I have to do to solve it. Obviously, I'd rather be less licensed or, raise less money to do it, but I'll do those things if that's what it takes. And you can kind of see this, I'll use lending as an example, because it's a little bit ahead. It's been a little ahead of the insurance space. There have been plenty of lead gen, balance sheet, marketplace businesses that haven't worked. And when they didn't work, it's because they didn't find a differentiated way to access customers or a reliable way to price risk. But then you see that Credit Karma became a huge business as an intermediary, but Affirm also became a huge business as a balance sheet lender. And then you have other companies that kind of came orthogonally, like Square or Shopify, that have become big lending businesses. And you realize that it's form should follow function, and function is really determined by what the customer needs. So maybe this is an obtuse answer to your question, Lucas, but I think the thing that we keep trying to find is entrepreneurs who can say, hey, here's the customer pain point, and here's how I'm going to solve it. And usually that involves lowering costs, making it fast and simple, and meeting the customer where they're at. These are all the things that Vouch is trying to do in the tech ecosystem.
Right. And not to put things in buckets in terms of full stack or tech enabled, but if you were to think about a market map of the spaces, different sides of insurance that you're excited about for beginners, how would you think about that? And what's top of mind to you?
Well, maybe the first place I'd start is there's a lot to be done in all parts of insurance. The personal lines opportunity is big. If you just asked me for my favorite, I would say the commercial insurance opportunity is probably the biggest, the most inefficient. And maybe I'd explain it this way, which was, I sort of said the incumbents should win, but the reason why the incumbents might not win, why founders like Travis and them have the opportunity is because the incumbents are stuck with legacy technology. They have challenges recruiting the same kind of talent, and they're tied down in their channels. Most commercial insurance companies, their customer is a broker, not the end insured. And that's true a lot in personal lines, but in personal lines, you've seen more disruption in the last 20 years with companies like Geico and Progressive trying to go directly to the customer, but it really hasn't happened in insurance yet. So you take the I think it's something like $300 billion in premiums written in commercial insurance in the US alone, or think about roughly half of that is in small and medium-sized businesses. It's an enormous market. And very few entrepreneurs are going to do the really hard work to figure out how to build digitally native insurance companies, because it takes a bunch of years, and it takes a lot of getting into the guts of solving like both hard technical challenges and also hard insurance challenges. So that I think we're biased towards that part of the market. Insurance more broadly, there's a lot that you could talk about around annuities, life and health, like different lines of business. But I think commercial is where I'd encourage people to spend their time. And, a great thing about it is from an investor standpoint, there really aren't that many entrepreneurs who are doing it, again, because it's so hard.
Travis, do you want to chime in? And it's okay if not.
No, I mean, look, I'm laughing because I'm remembering this conversation. So when I was at SEB, I used to host these like quarterly Insurtech dinners where we'd bring together like investors, founders, et cetera. This was like 2015, 2016. And I remember this like heated debate we had over full stack versus like distribution first businesses that are, innovating at the distribution layer. And I was like team full stack. We had backed a couple businesses like Root and Ladder Life that were taking that approach. But my perspective has evolved to really match more of a lot of what Nick just said, which is what I literally wrote down in my notes was overrated is this debate between full stack and enablers. You're seeing a lot of companies do both, offering proprietary and partnered products, opening up their infrastructure for others to build. And so like, at the end of the day, there's this phrase in commercial insurance, he who controls the customer wins. And I think that is still just as true as ever. Insurance distribution is king. And I would add one addendum to that, so long as you can ship great technology at a high velocity. And if you do those two things really well, to Nick's point, it's about solving for the customer need. And I think to win in commercial insurance, you've got to have a bunch of different levers at your disposal, both new product creation, the ability to work with other carriers. We compete and collaborate with the same carriers on a daily basis. And I think, it just comes back to distribution, client relationship, and being able to ship things at a fast rate.
Just to add to it, I mean, you think about Vouch is a great example. Travis said something important earlier, which is Vouch is really focused on serving customers kind of from startup to IPO. And that's a sort of an easy thing to say. If you were, building a CRM or, some other kind of horizontal software that was just infinitely scalable, you would have challenges as your customers got bigger. But I promise you, it's not nearly as complex as figuring out, the needs of a seed stage company that might buy $500 or $1,000 of insurance versus a public company that might buy several $1 million of insurance. These are vastly different needs. And in order to serve customers all along the spectrum as you go, it's not good enough to say, hey, I want to be a full stack insurer and, I want to do it all on my balance sheet, because you couldn't possibly do that. At the same time, if you just said, hey, I'm just going to sell other people's products, you could never recreate the kind of experience that Vouch has for that seed stage founder that just wants to get insured and get focused on building their company. Yeah, the opportunity lies in people who can manage the complexity of these things and build the tech stack. And it takes many years. And back to this question about, whether to incubate a business, I think maybe the best argument for incubating a business is that the founders and the investors kind of partner in a very symbiotic way and say, hey, here's the timeline. Here's a deep understanding of what this is going to take. Maybe it doesn't make sense to view this the way, a typical venture-backed tech company where you're constantly on this fundraising clock, because I think sometimes that actually leads you to build, something that will get you to a local maximum, but won't get you to the global maximum in very complex businesses that are regulated, that are capital intensive, et cetera.
Right. And Nick, so we were asking a few Insurtech investors and founders about, what are questions that you'd love to get Ribbit's thoughts on about the Insurtech space. 3 spaces that came out pretty consistently are platform insurance, embedded insurance, and cybersecurity. So would be curious to get kind of your over under of how excited you are about these.
I would say I think there's a really good opportunity in all of them. But if you force me to rank them, I'd say embedded is the broadest one. So I'll go, because embedded really also encapsulates cyber, which is a really exciting opportunity too. But embedded to me, it just means meeting a customer where they are. And the truism I heard at some point that they teach you in training at Procter & Gamble is that you're going to think about toothpaste for 100% of your time throughout the year, but your customer is going to think about it for 7 seconds in the aisle in the drugstore. And that's I mostly think that's true about insurance, is if you're doing your job well, you're going to make this really easy for somebody who's trying to just think about building their business, which means you really, if you think that's true about most insurance, like you really have to be there at the moment the customer needs you. And that's what embedded is about. So embedded has been happening in insurance for a really, really long time. But what's new now is you have all these new digital experiences. So, some of the partnerships that Travis mentioned, like Vouch partnering with SVB or WeWork or someone like that, to be there at the moment when, hey, say, for example, you've just done your first major, your Series A financing. It's the first time you need to buy D&O. That's on a term sheet that was handed to you. Like, can somebody solve that problem for you at that moment? All the way to, what Root Insurance, which Travis just mentioned, is doing with Carvana, where people are buying a car in that moment, they're likely to need or, be willing to consider new insurance. Can you embed that so they don't have to go through the sort of mental exercise or overhead of going somewhere else? So embedded is really big. It's one of these overused terms right now, but I also think it's really, really important. And then, cyber insurance and cybersecurity, I guess I just see as it's an example of a category or line of business that started as something really small. When we first invested, because we've invested in a few commercial insurance companies, not just in Vouch. We invested in a company called Coalition, which is a Vouch partner. And when Coalition started, the knock on the business was, hey, cybersecurity or cyber insurance is not that big a line of business. I think it was a couple $2 billion of premium. But this to me feels like investors looking at Stripe in 2012 and saying, hey, how big can this market really be? And the reality is Stripe's GMV now is bigger than the entire digital commerce, business was, or, market was in 2012. Like, that market has just gotten so much bigger. And I think that's what will happen with cyber. And even just the way we describe cyber insurance today is going to become a much bigger part of commercial insurance more broadly. So companies like Coalition and companies like Vouch will have to, a core competency will have to be understanding how the businesses they partner with manage and think about all the information around their company. Increasingly, that's becoming what a company is.
And Nick, so Ribbit recently led the Series A of Brazil's based Justos. I wanted to ask this as I'm from Brazil myself. Can you tell us, there's been so much talk about investing in LATAM recently. Sequoia, A16Z, they both published essays saying now is the time for LATAM. And as you know, most of the deals, the big deals that we see coming out of LATAM, I think 50% of them tend to be fintech. What's your broad perspective on LATAM? How is Ribbit thinking about it, and particularly when it relates to Insurtech?
I think the time for LATAM has been the last 10 years, and it will be for the next 10 years, just like other markets. But LATAM is really exciting because you see, like, in a lot of ecosystems, you could say the same, but I think it's really true, especially in LATAM right now. You have this first wave of companies that have opened people's eyes and changed their imagination about what, how ambitious they can be about things. So Nubank, which is on the precipice of going public, is the best example of this. I think a lot of entrepreneurs are looking at Nubank and saying, wow, if David and his team can go and build this in a category that everybody would have told you, there's no way you can build a new bank in Brazil. In fact, that's what we told David when we first talked to him about it. And it can turn into the most popular, the fastest growing digital banking service by far in Brazil and Latin America. I think it just helps entrepreneurs see that there's really huge potential. So we invested in Justos because the team is terrific and is really impressive. At the end of the day, I think that's true in a lot of insurance, and it's true in a lot of financial and services. Like, there's not a question of whether customers need this product. It's just, can the team build a good enough technology, have a strong enough culture of product-led growth to convince customers to choose them. And so the bet on Justos is that the insurance market in Brazil, just like the banking market is it's slow, it's inefficient, it's lacking, people who are really thinking about what the customer wants. And the Justos team is gonna tackle it just like companies like Vouch are trying in the US.
Right. And maybe one final question before we get to advice for founders in the space. If you think about, if you meet the next Travis and Sam, excited to build something in the space, what would your request for startups be? Do you have an idea or an insight that you haven't seen anybody build in the industry yet?
I think you want to look just where there's growth, and one obvious place there's growth is in the crypto ecosystem, and there are all kinds of insurable risks that are emerging in crypto around, people in the mining business need property insurance, very hard to get it. Developers want, coverage or, other professional liability coverage. It's really hard to get it. DAOs have their own emergent risks. Protocols have smart contract risks. Like there's really interesting new stuff to understand there to make that ecosystem grow. Part of what makes me excited about Vouch is that, by saying that you're the company that's going to serve the innovation economy, you follow the innovators wherever they'll take you. So I think Vouch will be, already is working on a number of these products and is the company that I would point to as being well positioned to tackle some of these opportunities. But there's room for a lot more too.
If you wouldn't mind, I could put maybe a PSA out there. If you're someone that's excited about solving these problems and could use a good platform with infrastructure to build on, give me a call, because I think these are, to your point, there are so many problems within commercial insurance and crypto in particular that we're in this disaggregation moment of these, I think niche solutions, and we want to be a platform to help consolidate that.
I'll say one other thing, Lucas, because it kind of demonstrates, sometimes in insurance the market's so big that the word niche it doesn't quite do justice to you could build a big company just doing that thing. And one personal thing is, we buy VCAP insurance. A lot of venture firms do. And it's, we also have the same experience that startups do in terms of wondering, why is it priced this way? Why did the rates just move? Why don't we get any support or services around this? What should we be priced the same way as some other, venture firm that we think is sloppier about how they do business? So Vouch is, I think, Travis, ready to sell this product. We haven't bought it yet. Because we're working cover our limits.
Nick, we're working with OnDeck uncovering the new venture funds there, but not Village Global and Ribbit yet. So I gotta give both you guys some shit.
Awesome. Well, yeah, let's make it happen. Nick, I remember you guys had this insurance report you created a few years ago that I was lucky to read. And I'm curious. You should say it as a segue, is that you guys have been excited about the space for a long time. How have you seen the space evolve in the past few years? About any major changes, or what's newly exciting, or what has accelerated?
My answer is going to sound like I'm such a fuddy-duddy, or just a very lame answer, but I think it's the truest. I don't think our thesis has changed. I think this is just a space where it's going to take 20 years for the thesis really to play out. In part because you can't build a great insurance company overnight. It takes too much capital. It takes time. And we're sort of at that phase. I guess I would say we worked on that letter for our investors in 2014 that you must have gotten a hold of, Erik. So we're 7 years in. And I think we're just kind of, I don't know if it's the second or third inning, but you have the first companies that have gone public. Now you have the public markets doubting. And we saw this happen in lending too with Lending Club, I think, went public in 2016. And everybody said, hey, maybe it was 2015. I'm sort of losing track of time. But everybody said at that moment, first it was, wow, Lending Club's a marketplace. It's changing how lending works. Nobody's ever seen anything like this before. And then suddenly it was, no, Lending Club's just a specialty finance business. Nothing to see here. All these companies are going to go out of business. And you fast forward 5 years in lending, and Lending Club did not go out of business. In fact, it's doing reasonably well. OnDeck did go out of business. Sorry, different OnDeck. You more or less went out of business. It's not that everybody had success, but then you turn around and you look and you're like, well, Upstart's a $30 billion business. Affirm's a $50 billion business. And what you saw in all that was it takes time for the best businesses and the best business models to emerge. And I think in insurance, we're just through that first little phase. So you have the public markets doubting companies like, Hippo or Root that are run by really talented teams that have built a lot of resources. And I think those companies have a chance to go prove that actually they'll be much, much bigger businesses, and the market is wrong to just see them as just another insurance company, because they really are modern software businesses that sort of are wrapped around an insurance company. And then you have, businesses like Vouch that are pushing the next frontier of, well, how do we become embedded, make the partnership, make the bets on partnership channels, make the bets on a set of customers. And then while you're doing that, build the infrastructure that over time you can kind of externalize or you can use to move horizontally into other categories. Like we're just sort of at the beginning, I think. So I don't know if that's a satisfying answer, Erik, but
if you guys don't mind, there's two things I wanted to add to that real quick. One is, Nick, I don't know if you realize this. Every new hire at Vouch, I give them your 2014 insurance letter as like an onboarding primer. So it's still pretty darn true.
And then I think people stay at the company.
Yeah, it works. And then secondly, I think we should acknowledge the fact that like companies like Vouch are getting to stand on the shoulders of that first wave of Insurtech, right? So because Alex and Asaf built Root and Hippo into these amazing companies that are taking a lot of flack in the public markets today, but it paved the path for us to now chase after, a really complex line of business in professional liability for tech companies. And like that wouldn't have been possible without that first wave over the last, 5 to 10 years.
I think you're seeing it in Insurtech too, maybe to state something that's obvious, because we've seen it in banking. Or in fintech more broadly. First, you have the unbundling, and people say, "Hey, here's a product innovation I'm going to offer." Lemonade would be a great example because they just bought Metromile. I'm going to offer cheaper renters insurance, and I'm going to make it a beautiful digital experience, and I'm going to onboard every 25-year-old in New York City and other similar geos. And then over time, as they raise capital and grow and get to be bigger, the question is, well, can they really surround a customer and own a customer? Back to this sort of point about Vouch and the innovation economy, it's that's really where, I think you get to build an enduring company is, can you evolve into a business that does more than just, one thing? So not surprising and smart, I think, to see someone like Lemonade buying Metromile and starting to expand their aperture.
Yeah. Makes sense.
To double click on the public market performance, Travis, you've known and studied and worked with some of these companies for a real long time. And as Nick mentioned, a lot of these companies have been struggling, Hippo and Root, after they went public in the last year or two. What do you think that the markets are not appreciating yet, besides maybe just the fact that these are, software first businesses?
Yeah, look, I'm not nearly as close to those businesses today because I've been kind of like heads down living under a rock for the last 3 years. But I'll tell you, just from like more of an outsider's perspective, I do think that folks that are used to analyzing insurance businesses aren't sure how to think about the growth rates that these companies have experienced in particular and what that does to core profitability metrics within a book of business. But I'm also not sure that they really know how to think about the compounding gains of being a technology company and having differentiated distribution. I think those two things in particular can really compound on a business. And so I think, for instance, some of the things that Root's doing right now with Carvana, like great example of differentiated distribution. I think from a data perspective, what I've seen in the filings from, how, for instance, the latest telematic models have progressed. I'm not sure that that progress is really being, baked into the price of the business. Now, I think the third reality of these things is that, these are very operationally complex businesses with a lot of kind of regulatory and capital constraints. And so I think that's where scaling becomes all the more harder. I think the problems of scale present themselves, as you grow. And so that's where I think having really patient capital partners around the table goes a long way. And where I think being a public company as a company that's still growing through those hyper growth phases in a highly complex category, being a public company makes it all the much harder because I think you end up wasting a lot of cycles on, trying to make this a predictable business when it's just not yet. And so again, I would say that's underinformed. Nick probably has much better ideas, but that's just my outsider's perspective.
Yeah. So what have we not yet discussed on this podcast in terms of Nick, perhaps what's a request for startups that you have of if you're going to, back more insurtech companies in the next few years or even, incubate one, what subsectors would you be, or opportunities or white space are you excited about that we've not yet covered?
there's a big part of the opportunity for disruption that's about reaching consumers or businesses directly. There's also a big part of it, which is meeting consumers or businesses at the point of sale. So the embedded opportunity. But insurance is very big. It's very complex. There are lots of types of businesses, many businesses who will, and consumers who will continue to want to work through agents. And I think there really is an opportunity to build better software to empower the next generation of agents. I think a lot of the software that has been built for agents, I would describe, historically as like, hey, we look at a big agency and then we try to figure out what their pain points are, and then we build software to sell to them, as opposed to, hey, what's the 20-year-old today who is going to end up being an insurance agent? Because, by the way, it's a great job. Like you can make a lot of money, and you can really do a lot of good by being a high quality agent in the insurance business. It's a complex thing for customers to figure out. So what are the tools? What's their workflow look like? How are they going to manage and build customer relationships? What kind of products are they going to plug into? One thing that I think, people tend to look at a company like Root or Hippo or Vouch or Next Insurance or Coalition or others and say, hey, these are, they think about them as the channel they're in today. But I guess what I see, because these businesses are like icebergs, like there's so much complexity underneath in terms of building state-by-state licensing regime and your own policy management system, and lots of insurance products for different lines and classes of business. It's that you're going to probably amortize all that you build across different channels. So in other words, or to be more exact, someone like a Vouch will over time probably sell direct, but also sell through agents. And if you're then thinking, back to this question of like, well, what is the agency management system, or what does the best software for agents look like in the future? It probably plugs into this new wave of digital product creators in a way that creates a much better experience for the end insured and makes the agents much more efficient. So I'm interested in that category. I think it's often the case that first you have the disruptors, then you have the tools that enable some of the other distributors to be disruptive. And then ultimately you might have software that helps some of the best incumbents, the nimblest incumbents try to compete. And I think in that last category, that probably feels the furthest away from me. But there are some ways to go. I think there are some high quality companies that are building software for insurance companies. I tend to think it's probably, with a couple exceptions, not the best, like not where I would go spend my time when the innovation economy, when the behavior of businesses and consumers is changing so quickly. I'd go pursue something like crypto.
Right.
Can I take another angle at that? Because I think there's insurance has played this important role when you look back over the last 1,000 years, right? So every major technological innovation, drives societal change, and whether it be homeowners insurance from the Great London Fire of 1666 or whatever it was to, maritime insurance, etc. They're all totally driven by these big technological changes in society. And ultimately, insurance is just something where if you have the data to with reasonable confidence predict the likelihood and severity of something happening, and that price is palatable by the market, you have an insurance product. And I worry that sometimes we're as a class of entrepreneurs, we get too caught up in, well, how do I improve this existing insurance product that's on the market today? And we're not asking ourselves enough about what are the major risks that are keeping parents, entrepreneurs, whoever the customer is, who are keeping those people up at night. And can we use the modern data that's at our disposal to actually put a price on that and help people transfer that risk and manage it more effectively? And so, the example that I use for Vouch in particular is there's this rule in commercial insurance that 30% of business risk is insurable. And that's been the same number for decades, apparently. Well, if we have access to your cap table data and we integrate with your bank account and your HRIS and all these things, why can't we, not only reduce friction in underwriting, but identify new insurance products that move that number to 40%, 50%, 60% of business risk being insurable, and fundamentally grow the TAM of the market the same way Uber, Airbnb have, but also help society, put shock absorbers on society. We're in this moment of accelerating change. And so, those are the problems that I think about all the time. But I think if you apply that lens to pretty much every segment of the economy, there's this whole white space around creating, particularly within crypto and Web3, whole sorts of white space to create new insurance products if you put that lens on it.
Can I ask you, through the on-deck cohorts, where do you see, to the extent you see entrepreneurs bringing up insurance or exploring it, where does the energy seem to be?
Yeah, I not a ton different from what you guys are saying. I think that it's a space that we're seeing people get excited about who don't have domain expertise, and they're looking to. They know they're big businesses to build, and they want to partner with people such as yourself at Ribbit, or people, yourself, Travis, who worked in it a little bit before, who have domain expertise and what we can partner on. And I think that's just a broader trend that we've seen. We sometimes say that in 2005 or whenever YC was getting off the ground, the arbitrage was, people weren't backing like technical founders who were generalists. And because they could just build sort of like the first layer of what became these startups that didn't require domain expertise. But as software has started to really eat the world and is now going like very niche, domain expertise actually matters a lot more. And especially as it's become easier and easier to get products off the ground or to build, or AWS, et cetera. So we're seeing people with domain expertise in like very sub areas or niche areas be more in demand, and that we're excited to back them and help them find co-founders.
And I think one exciting thing, and I won't be the first to say it, probably like the 900th VC to articulate the thesis, but I think it's really true, and we're still early in it, is that software and financial services are merging. Or another way of saying this is that financial services is becoming a layer in the software stack. And I think what that means is historically there are a lot of verticals where you probably just couldn't build a venture scale business. There were some like, you see vertical software businesses that have become really big, say in home services or in construction. But there are fewer and further between, because there are lots of other verticals where, an entrepreneur or business owner probably would like something that's specialized or built for them. But where if you add up all those entrepreneurs times what they're willing to pay for a SaaS platform, maybe it could build a good business, but maybe not a venture scale business. Now, when you start to say, hey, that software company is actually the best positioned company from a data and distribution and context standpoint to provide financial services, payments is the one that's happened the most so far, but insurance is another, really logical one. And you say, well, what's the TAM of, the insurance market serving restaurants or doctors' offices or dentists or whoever, and you start to imagine, the company that serves those ecosystems and sells them software plus payments plus lending plus insurance, and maybe they're not building it all themselves. They're probably partnering with a company like Vouch, who's built a lot of the complexity and the infrastructure, but they're capturing a meaningful amount of the rent. So I think for founders who are interested in insurance, it pays to say, well, who's the customer you want to serve and what software can you build for them? And then you can work your way into like, should I also be an insurance company for them? And that's probably a good algorithm for figuring out a good business opportunity, as opposed to saying like, well, what's just like the best commercial insurance market?
To double click on the point about, advice for founders, wanted to spend a few minutes talking about what are maybe other pieces that they may have that you think are underrated that founders building in the space should know. And Travis, I thought it would be fun to start actually. Shub Monhot from Better Tomorrow Ventures just tweeted last week how 2 or 3 of his founders of now successful unicorn companies came to him and told him that he actually that they wanted to have a board early on, and that they think it would have actually benefited the company. And I know this has been the case with Vouch. So do you want to talk a little bit more about that and why in particular Insurtech that might actually matter?
Yeah, I mean, there's a lot, I think, that goes into that. I mentioned before, just I think the credibility and expertise component of having like great, not just investors, but board members, like that's critical, I think, for any kind of business, particularly for this kind of business. But I also think there's just an accountability mechanism that goes into having a great board behind you. And so actually, whenever I talk to new founders that are just getting started on a new idea, I really encourage them to think about, why don't you create like a synthetic board effectively that has, friends, family, whomever it is around the table that you can send updates to either weekly, every 6 weeks, whatever the right cadence is. And they're your informal board, and you start creating that muscle really early on. But it also enables you to, I think, identify where do you need to fill in your gaps. right? And I think we've tried to be very thoughtful about, with each new person that we add to the Vouch board, what are they bringing to the table that's fundamentally different than what we have there today? And I think, with Anu coming on and joining the board in our Series B, she was able to bring us a whole different, kind of perspective in working with all the founders she works with at YC. And I think her unique experience as a growth investor. And so the complementary pieces thing, when you fill out a team, same thing with your board. And I think just having that, I think it's never too early to get at least that synthetic board mechanism in place, particularly when you're in a world where venture investors, I think in today's environment, are stretched, all the more, you're talking about being on 10, 20, 30 boards maybe. And so I think when you can get people really locked in and invested in caring about your business and having that skin in the game early on, it can make a big difference. To say something trite, but that I think is really true. Boards are either I see them either as the best or worst experiences in our job. And the thing that's uniformly true when they're the best is that the founder has thought about the board as a way of helping them do their job, and comes to the board and says, I need this board to be 30 minutes, or I need this board to be 3 hours, or I need this board to be structured this way. But they've really thought about it. What does the business need? And I think, having, you have the right board members if they respond to that well, and you have the wrong board members if they try to say, hey, this is what the board is for me to capture information or to try to tell you what I think is the most important thing. So I think it's worked at Vouch having a board from very early on, in part just because there was a lot of trust between Travis and Sam and us. But I wouldn't recommend it for every founder. I think it's really something you should do if you have somebody great, and if you have the mentality to say, hey, I think this can really help me have regular check-in points to structure what are the biggest challenges or strategic questions I'm facing. Yeah, I 100% in terms of it's got to be the right folks around the table. I've been part of, when I was a board observer, on the venture side, I remember talking to some founders about, they viewed their board as a complete waste of time. And this is something I just have to do. And I'm just going to nod and smile and pretend like I'm listening to their advice. And then I'm going to go move on. And I think that's because you didn't have the right people around the table to begin with.
And perhaps as a final question, what are the most common misconceptions or mistakes that you see founders making in the insurance space?
I have one, Nick, I'm sure you probably see a lot more than I do, which is, I think, just hiring a chief insurance officer because they've worked in the industry without any sort of perspective on what are the things they spike in, what's their actual relevant domain expertise. Just because you're a technologist and they come from insurance doesn't mean they actually bring the skill set that you need to run the business. Someone could be coming from an ops background, an underwriting background, a claims background, and you kind of need at least for a business like Vouch, we need really that full value chain. And so finding someone like John Wallace, who has worn all those hats and built, large teams and books of businesses, that was really important for us. But I honestly probably would have, if I hadn't had the right, Nick and other founders that have built Insurtech companies before, challenging me really early on and pushing me on that dimension, I probably just would have hired somebody that had some commercial insurance experience and called it a day. And we would be, I think, way behind where we're at as a result.
Lucas, I would say, you have to know what game you're playing, and not every business is the same. We all look for these venture playbooks, or, here's how you hyperscale a company. And I just think in different categories, different types of companies actually require different pacing. Now they all require you going fast, but they also require having different timelines in your mind. So I always say, in insurance, I think you got to move really fast, but you have to be patient. And what I mean by being patient is you've got to build the company with the end you have in mind. I think if you just woke up and you said, well, how do I make this business really big, really fast? You're probably a lot less likely to build the enterprise value that comes from building a lot of your own systems, developing the right technology, the right integrations, the right customer experience. Because the truth is, there are a lot of, we say that you could say, hey, the insurance industry suffers from innovation, a lack of innovation, but that's actually it's really false. Insurance is full of every possible type of innovator and huckster and salesman. There are incredibly smart people in the industry. What there's been a lack of are, I think, people who are great at building software and can then think about how to, serve the growing digital economy. So if you want to be a company that does that, that's a software company at its heart, but that also manufactures or distributes insurance products, then I think you have to remember that and not get on the insurance treadmill really fast, while forgetting that in the end, you either have to create a better experience or make it more efficient, or offer something, in a channel that other people can't participate in. And that means you have to be a digital company at heart.
Yeah, that's a good place to wrap. My guests today have been Nick Shalek of Ribbit and Travis Hedge of Vouch. Travis, do you want to leave us with any plugs or anything upcoming, or where can people learn more?
Just head to vouch.us. Obviously, we serve technology and life science companies exclusively. So, head over to vouch.us. We'd love to help out.
Travis, Nick, thank you for coming on the podcast. It's been a great episode.
Thank you so much, guys. It's been a lot of fun.
Thanks, guys.
For having us. See you.
If you're an early stage entrepreneur, we'd love to hear from you. Check us out at villageglobal.vc.